Hi there, Carla Cottrell again with Coastal Conversations with Carla. Today we are super happy to have Garrett Griffith with Heroes First Home Loans. I have to get that right because I say the name wrong occasionally. Oh, look at there. I could have been looking at his computer screen the whole time. Garrett is known to me through Women's Council of Daytona Beach. It's a network that we're in, and he presented recently at VA and Vino for Women's Council, which, you know, who doesn't love wine and who doesn't want to love our veterans. So it was a great meeting, and I asked him afterwards if he'd like to be here with us, and he agreed. So Garrett, I'm gonna just let you take it away and tell a little bit about yourself.
Okay, well, thank you, Carla. My name is Garrett Griffith. I am a mortgage loan originator with Heroes First Home Loans. Before this, I was in the Marine Corps and then did several things, you know, kind of in between. But I was in the infantry in the Marine Corps, served overseas in Afghanistan, Japan, South Korea. So I have a little bit of a service background. I know kind of how the military works, and what I really didn't know when I got out was how VA benefits worked, and especially the VA home loan. And it's just weird that I got into mortgages because I never saw myself doing this, never saw myself in any kind of financial position.
You know what's funny? He told me right before this that he wrote a blog, Marine to Mortgage Originator.
Yes, I did. It was a kind of a marketing thing to hit the ground running, and I wrote, you know, a little essay about how the transition even happened, and I really couldn't remember what I said in it, but it was pretty interesting to actually think about the things that I'd been through and how I got in this chair today.
Right.
So that's basically Garrett Griffith in a nutshell.
Awesome. He's also a guitarist, so hang on to that because we may get to that later. Garrett, tell us about VA loans. What are they, and why does it benefit a service member to use them?
Okay, so a VA home loan is exactly what you think it might be. It's a home loan that is guaranteed by the VA. So it's a government loan. It allows any eligible service member to, you know, buy a home for zero down payment if they qualify for that aspect of the loan. It is super beneficial because not only does it allow them to qualify for 100% financing, but typically it has lower interest rates than a conventional home loan would, as well as FHA. Government rates tend to be a little bit better, especially now. But it's just an extremely affordable product for veterans who are active duty, or personnel who are active duty, veterans who are out and have the eligibility to do so. It allows them to purchase more house because they're saving money on that down payment as well as monthly mortgage insurance.
So you mentioned the word eligibility because, and that's something that we realtors get questions about, and I go, let me talk to Garrett. Because I didn't, and especially previous to our encounter at VA and Vino, I really didn't understand it. I kind of knew about it, but I didn't really understand it. So tell us about eligibility.
Yeah, so to be eligible for a VA home loan, basically the active duty member or the veteran has to have eligibility from the VA. So in order to find out if they have that, we send a request to the VA, and they come back with, I need more information, such as paperwork, or they give us what is called a certificate of eligibility, referenced as a COE. It will tell us everything about that veteran, basically how much their guarantee is, because the VA guarantees that mortgage. It will tell us if they've used it before, if they have a home that is currently on a VA home loan, and it also will tell us if they are exempt from the VA's funding fee. And we can get into the funding fee once, you know, we jump into the PowerPoint, but if they are exempt, then they are not charged the funding fee.
Wow, and that could be big.
It is huge. With the funding fee, it tells us how much money they make from the VA disability compensation each month. So that's another big factor for lenders. You see that number right in front of you, no pay stubs needed or anything for it.
That's awesome.
Yep.
So you mentioned your PowerPoint, so why don't we jump in?
Let's do it.
This is the part that really got me at the last event we attended.
Okay, well, let's start. So there's a little bit of a history lesson on VA, and it came about during World War II. Franklin Roosevelt, on June 22nd of 1944, signed into the VA home loan, which was called Servicemen's Readjustment Act. GI Bill of Rights is another word for it. The VA home loan has been around for a little over 75 years now, and it has backed more than 25 million homes to date. Yes.
Yeah.
So in 1944, the VA guarantee was 50% of the loan amount, which it's $36,000 now, but it couldn't exceed $2,000. So that tells you a little bit about
Housing prices.
Because the average home price in 1944 was about $8,600.
Unbelievable.
That's not even really a down payment in today's
Right,
world, right?
no, yeah.
So they had the loans had a 4% interest rate cap, and the term could not be 30 years. It had to be 20 years or less.
Wow.
Yep. So another thing about the pre-now VA home loan is it was required to be underwritten by the VA. So there were no, I have an underwriter who was VA certified. Mm-hmm. There is none of that. It was all VA directly underwrote it. So it was set up for World War II veterans only. The only veterans who could qualify or be eligible for a VA home loan were World War II vets.
Wow.
And they had to serve 90 days between September of 1940 and September of 45. And then the VA also obviously has a va.gov website that if anybody out there wants to learn more about, they can visit, and you'll see that in the PowerPoint. But moving on from history, you mentioned advantages of the VA home loan. There are several. So the VA guarantees a maximum of 25% of the home loan now versus the 50% back then. Mm-hmm. So we call it the best jumbo financing ever, because if you think about a conforming loan limit on a conventional, we're at $647,200. Mm-hmm. There is no true limit on a VA home loan. So if a veteran wants to buy a $1.2 million home and their financials...
If you do, call me.
Yes, please. if their financials support the idea that they can afford that, then there is no need to go into jumbo financing. So another benefit, no loan limits, like we just spoke about. You have to have full entitlement for that. We'll get into the entitlement as well. Conforming loan limits versus FHA. FHA, as you know, is lower than the conventional loan limit. No down payment. That's probably the most notorious aspect of a VA home loan. Now, there are certain situations where a veteran or active duty member will be required to put a down payment down, but those are situationally dependent, and most of the time are pretty rare. So 100% financing.
They could also choose to.
They can choose
and take advantage of the lower rate.
They absolutely can.
Yeah.
Now, if you do think that you want to put down a down payment on a VA home loan, obviously get with your lender and discuss if that's still beneficial for you to use the VA home loan. Sometimes if you're putting a certain amount down, it won't necessarily be the best product for you. But if you're trying to take advantage of that 100% financing, this is the program, because what other program besides USDA offers that?
Right.
So closing costs to the veteran are limited, just like they are on FHA. You don't have the down payment requirement, and there are certain caps and certain things that are not allowed to be charged to the veteran on a VA home loan. So that allows usually 2 to 4% of the loan amount to be their closing cost. Yes. The mortgages are assumable. It's not very often you come across somebody trying to assume a VA home loan, but the person who is trying to assume that loan must also be a veteran and must qualify for the loan, obviously. And no prepayment penalty on this loan if they decide they want to pay it off early. Must go through the lender, and then when you assume a mortgage, you are required to pay a funding fee unless you are exempt from that funding fee. And we'll get into that again. No monthly mortgage insurance, another huge one. So on conventional, up to 78 to 80% loan to value, you have monthly mortgage insurance. And depending on your qualifications, they're somewhat cheap to somewhat expensive. On FHA, they tend to be a little bit higher because it is a government program, and typically when you're using a FHA home loan, you've kind of got financial reasons why you might be there. So challenged credit, limited assets, stuff like that. So the monthly mortgage insurance is more expensive. VA has none. So they can afford, no more home because they don't have to put money down, and they also don't have that extra, $75 to $200 a month for mortgage insurance.
So for folks listening that aren't really familiar, he's referring to what we call in the industry PMI. So you may have gotten a quote at some time for a loan, and then there was another column that said PMI will be. That's what we're talking about here.
Yep. So conventionally you have the PMI, and then with FHA you'll have the MIP. So they kind of work different. Yep, same thing. So the VA will help any active duty member or veteran borrower or homeowner who is on a VA home loan if they experience any financial difficulties, which is a pretty big deal, It keeps the borrower from potentially going into forbearance, foreclosure, things like that. So all you have to do is contact the VA, and somebody will be assigned to you to help you figure it out.
That's a really nice benefit.
Yes, and the coolest one that I come across, and I answer this question nearly every day, is can I use my VA home loan more than once? You absolutely can. So you can use it it's a lifetime benefit. You can use it today, you can use it tomorrow, you can use it simultaneously. Now there are, obviously restrictions to using it simultaneously, but if you have a VA home loan and you sell that home, your eligibility is restored. You can go tomorrow and have full eligibility and use your VA home loan again.
Awesome.
Yes. So, I'm working with some borrowers who are, over 80 years old right now, and this is their first use of VA home loan, but just goes to show that it is there for life.
That is so exciting.
Yes.
Wow, I can't imagine. That's exciting.
Yeah. So eligibility, a big one. All qualified veterans are eligible to obtain a VA guaranteed loan. Now, an unmarried surviving spouse of a veteran who has succumbed to his or her service-connected disabilities is eligible. They must have passed away from something linked to whatever they were service-connected rated for through the VA to have that eligibility. If you have two unmarried members, they both must be veterans in order to be on the loan and buy that home together. If you just have, a girlfriend or fiance, it's only going to be able to be you who can be eligible until you get married. If you're going to do, two veterans together or two active duty members that have no marital ties, it does have to be underwritten through the VA. So, our in-house underwriters can't mess with that. They have to send it off. A certificate of eligibility, or a COE, is issued for veterans with DD-214s or retirement point statements. And a DD-214 basically is discharge paperwork. So the day that you get out of the military, you get this great 8x11 piece of paper that has all of your information, the dates you served, where you went, the awards you were given. And it's for people who are getting out, and I know I felt the same way, I took a picture like this because I was so excited, and looking back, I'm like, oh. But it's like a golden ticket, basically. Retirement point statement is similar. Usually the people who have that are either National Guard or they were in the reserve of some sort. So you now have to actually contact the VA to get your COE issued. You used to be able to just log on our little VA website and pull it ourselves, because I've done it just to experiment. You no longer have that ability. So a lender...
Why is that?
I really don't know.
Okay.
That's something the VA just kind of decided they wanted to do, take away the rights to do that. I don't know if they were getting altered or what was happening with them.
Could be.
But now
Fraud
lenders...
is everywhere.
It is everywhere for sure. So if you ever need a COE, we can help you with that. It usually only takes 15 minutes to receive it back, unless there's something else that needs to be kind of given to the VA in order to support it. VA is always going to be the final decision maker for eligibility, and what they use is the COE. So if there is no COE, or the COE states you're not eligible, then unfortunately you are not eligible to use a VA home loan, even if you were a veteran. And then obviously, if you are eligible, you still must qualify to the loan. For the loan, you must meet credit, income, and asset standards to be able to afford.
So what kind of situation would a veteran not be eligible? Would that?
So typically, the number one reason for no eligibility is a dishonorable discharge.
Oh, okay.
Yeah. So I have not come across any other than honorable discharges, but I have been told that other than honorable usually still will have eligibility through the VA. But dishonorable discharges, like the
Right.
last line I just pulled up, you do not have
Okay.
benefits,
Well,
and most likely,
I guess that makes sense.
yeah, you don't have any VA benefits at that point. So the entitlement codes and conflicts, not really a huge, something that everybody needs to know, but on the COE you will see these codes, and I have the code 05 highlighted because it is called Entitlement Restored, and it is what it sounds like. They have used their VA home loan before, but they have had their eligibility and entitlement restored to
Because
their
they
name.
sold that
because
home
they have
and
either satisfied the loan or sold the home.
Okay.
Yep. And then, we go through these. We're still in number 10. We haven't, I don't even know if America is in war or peacetime right now.
Hard to know.
I would imagine it's peacetime right now, but
Yeah.
number 10 is the era that we're in right now,
Okay.
the Gulf War, even though that was in the
Wow.
90s.
Yeah.
11 is another big one, reservist.
Okay.
And then here's some dates that you must have, days and times that you must have served if you were in certain eras. So a lot of these, World War II, that's probably not going to see very many COEs for those people anymore. But, in the Persian Gulf from 90 to now still, you must have served 24 continuous months active duty or full period called to active duty no less than 90 days in wartime or 181 days in peacetime. And those are consecutive days. And those last numbers, 90 and 181, are going to be for your reservists who were activated.
Right.
So active duty must have 2 years of continuous service. And then the funding fee is another big term with the VA home loan. So the funding fee is basically what the VA charges to its borrowers in order to continue funding loans.
Sure.
So because they back these loans, they have to have some kind of money to be able to continue to do them. So if you are not a service-connected veteran, if you do not have a disability rating with the VA, you are not exempt from this funding fee. So this table shows what you will be charged for each loan product purchase, cash out, their rate reduction, refinance loans, things like that. And typically, if you're not exempt on a purchase, your first time with a VA home loan, you're going to be charged 2.3% of the loan amount. And that is not out of pocket. It can be paid out of pocket like a down payment, but most of the time, you're going to finance it into the loan. So when somebody says, the home I'm buying is only $300,000, but why is my loan, math.
306
yeah.
or whatever.
Why is my loan this much? Because you are not exempt from the funding fee. And a lot of the times people kind of, they misconstrue it and think that that's something that the lender charges. It is not.
Right.
That is
The
VA
VA.
required.
So I don't know very many veterans who don't have some sort of disability rating. Is there a sliding scale? So if you're 50% disabled, the funding fee would be X. If you're 100%,
It is zero. It is exempt or non-exempt from 0 to 10%.
Wow.
So if you even just have 10% service-connected rating through the VA, you are exempt from all funding fees.
Wow.
Yeah, as long as you have that rating. If you get reevaluated and they drop you back down to 0, probably going to be charged a funding fee again. But 10 to 100% exempt, and that's a pretty big deal. And if a veteran is not exempt at the time they buy the home, but within the time they have this loan, if they become exempt, they get that rating, they can be reimbursed for that funding fee.
Oh, that's good to know.
That is a pretty cool
because
feature.
a lot of people have to jump through some hoops
Yes.
to get their rating.
Yeah.
I mean, I know people who've gotten out and then they have to sort of battle
Yep.
to get a rating.
Yeah, and
then
I will vouch for that because personally I am.
You had to do that?
Yep, yeah, I am a victim of that. But it's worth it. It really is because, like we sort of mentioned before, that income it can be used for qualifying for
Sure.
a loan.
Yeah.
And if you're adding 2.3% of a loan to that loan amount, obviously you're qualifying for a higher loan amount now, and that little bit of extra money could be the make or break in certain situations.
Wow.
So it is a pretty big deal. Okay, so more funding fee. On the loan, you can have a veteran and a spouse. If the spouse is a non-vet, they obviously won't have they won't have a disability or be entitled to a funding fee. If the veteran has the funding or the disability rating, he does not pay the funding fee. If two married veterans, so both are veterans, are on the loan and both have disability ratings, no funding fee. But if one and the other are, or one is disabled and one is not, they have a prorated funding fee.
Oh,
yes.
okay.
And then you also can kind of put those two together for entitlement purposes and use either one of your entitlements from your COE, or you can put both of your COEs together and just have like a joint to where you're not charged the full entitlement and neither is your spouse. Now, there are certain situations where obviously that makes more sense than others to do it for both because you're kind of eating up two entitlements when you could just use one. But your lender will obviously have more information on whether or not that would be beneficial to you.
Yeah, I'm sure there are all kinds of scenarios you see.
Yes.
Yeah.
All right, now qualifying ratios and credit scores, the meat and potatoes of every loan product. And VA is kind of superior in this aspect. I might be a little bit biased because I'm a veteran and a lender, but typically you must have a DU or an LP approval. And what I mean by DU and LP are the two different loan underwriting, automated underwriting services that we use. If you have an approved and an eligible on either one of those, you are good to go. If you don't have that approved and you get a refer, you can manually underwrite a VA home loan.
Okay.
But there are obviously tighter restrictions for manually underwriting. So now, when you had a 65% debt to income ratio and you got the approve, if you didn't get that approved, we now have to say your cutoff for debt to income ratio is 45%.
Oh,
so
okay.
If you don't approve at the 65, chances are you're not even going to move forward to manual underwriting.
Right.
And that is a hard thing to come across because they could be squared away in every position other than debt to income ratio, but there's nothing more that you can do for them at that point until they kind of get rid of some debt. VA has no minimum credit score. A lot of the times I hear people...
That is amazing.
Yeah.
That is amazing.
They do not set a credit score minimum for any of their borrowers. The credit score requirements derive from the actual lenders. So every lender could have a different credit score minimum. I've seen some that will do a VA home loan at 500. We currently are at 600 for the full 100% financing.
That's still great, though.
It is. It is great.
That enables people who are getting their lives back on track to plot their path to wealth. I mean, because what builds your wealth faster than home ownership?
Absolutely.
I mean,
Yeah, they say a mortgage and an auto loan and a credit card are the three things you need to have great credit. So we do have the option to not use the 100% VA financing. So if their credit score is a little more challenged and it's say around a 585, a 590, they do have the ability to pay 10% of a down payment. So they will get 90% financing, but they are required 10%. So $300,000.
I just had one of those.
It's hard to really say. I know we have credit score minimums in the industry, but when you're kind of floating around the minimum credit score, the computer tends to not really enjoy that so much. So it is going to be like a whatever the computer says goes kind of thing. And it's just a coin flip at that point. But 600 or better, usually around a 620, you're probably going to be very squared away. Now, the typical debt to income ratio, what VA and underwriters like to see is a 50% maximum. So your housing ratio plus all of your monthly debts. That's not to say you can't get one at a higher ratio. Residual income, other factors come into play with that. Because I personally have seen one be approved over a 70%.
Wow.
The underwriter was like, no way. And they were approving it, just no way this is happening kind of thing.
Yeah.
But it is possible, but they tend to like it around 50 or less.
Well, I mean, it just makes sense.
Yeah.
I mean, you want the people to be able to live and not be house poor and not be able to live and do anything else, you know.
Yeah.
So,
and
I mean, that's the goal for everyone.
Yeah.
You don't want to live in a structure that keeps you prisoner, basically.
Yeah, and that's something I like to have a discussion with to my borrowers as well, is because my job title is home loan strategist. So if I'm going to use that term, I have to be able to create different strategies that fit them the best. And just because on paper it says you can afford this $2,500 a month payment, can you actually, like, are you going to be comfortable? Are you going to be able to live? And that is why the VA has residual income guidelines. So if you don't have the residual income minimum for whatever size your family is based on the region of the United States you're in, you're not going to be able to get the VA home loan for that amount because you're going over the maximum.
You're too stretched.
Yes.
Yeah.
And child care, this is the only loan that it is required to be counted as a debt, a monthly debt against the borrowers. So if you have children and you take them to the daycare and it's $1,000 a month, that's $1,000 per month debt that you have to count against you. Yeah.
Okay.
And then we talked about the residual income.
It can cost that much.
It can. I've seen it recently be that high. So a little bit about the residual income guidelines. There's a table here for the South because we are in Florida, so this is our region. If it's just a veteran, no spouse, no kids, family size of one, a loan above $80,000, because what's going to be under $80,000?
Nothing.
That veteran must have at least $441 after all of his or her bills are paid at the end of the month.
Okay.
And then this will show you a little bit different. I'm also licensed in Pennsylvania, so I have to take into account different residual income guidelines. For the same scenario, they must have $450, so a whopping $9 more at the end of the month.
Look at that. It's more expensive to live in Pennsylvania.
It is. All right, bankruptcy. So Chapter 13, if you need a satisfactory history for at least 12 months before you can get a VA home loan, and you must be on a payment plan that was approved by the court. 7 or 11, a Chapter 7 or 11 bankruptcy, if it was due to circumstances beyond the veteran's control, then you need 12 months from the date of discharge. If the bankruptcy was for any other situation, such as divorce, because divorce is not considered beyond the veteran's control, you need at least 24 months with satisfactory reestablished credit history. So that is a big one.
So I assume that, and I don't know that we touched on this before, but I assume that as a strategist, if somebody comes to you in one of these situations, you can say, look, we can't do it now, but let's keep in touch. Let's make sure you're doing everything you need to do. And 12 months from now or 24 months from now, we're going to get you that loan.
Absolutely. So what I've done in the past is just actually done the loan application from head to toe. And even though I know this foreclosure or this bankruptcy is there, I'm going to just kind of omit the fact that it's there and see exactly how they stand and where they're at with what they're looking at. And then I'll say, okay, there's this bankruptcy or foreclosure, and I'll tell them, you need to work on this in order to get to where you would like to be, but time is your best friend. Time and a satisfactory credit history.
Right.
Because when you're running through these automated underwriting systems, they might have a great credit score, but their credit history might show a couple late payments here and there, and they just haven't really hit them too hard. The computer reads that entire credit report. So if it sees red, as we call it, because they're highlighted in red, and chances are it's not going to like that file. So they need to have that credit, kind of repaired at that point. But yes, as a strategist, I won't just say, oh, you've got a bankruptcy, get away from me kind of thing. I like to treat everybody as if they were, my brother, and I did serve with them kind of thing, and give them the best that they can, or that I can, and that's just the way we operate.
Yep.
Foreclosures I mentioned, but the same guidelines apply to foreclosures as they do with the bankruptcies for VA. Now, the thing about a foreclosure is it will remain on your certificate of eligibility forever. So if you foreclose on a home, you will no longer have full entitlement on your COE. You will have whatever entitlement was charged to that home purchase will always be on your certificate. So the lender will have to calculate what you can qualify for when you're buying a new home.
Makes sense.
Yeah.
That's specifically if you are foreclosed on a VA
On a VA home
funded
loan.
home.
Yes, sir. Yep. So loan costs in the seller, not really a hot topic right now. Maybe we're starting to get back into this. I hope to see some of this. But the lender, not the VA, sets all the points, the fees, all these things. They're obviously different from lender to lender. The seller can pay all of these though. They can pay reasonable, as the VA defines it, discount points, which is a maximum of 2 points. But then there's a little bit of a kicker here. Other costs that may be paid by the seller, normally up to 4% of the sale price, is the payment of the funding fee if they have it, prepayment of taxes and insurance, payment of extra points for rate buydowns. So the seller can pay up to 2 discount points for the veteran, but then they also, in their 4%, can pay more additional.
Yeah.
So it's kind of a can you, can't you, but VA, says you can. So, and then the sellers can also pay off liens or judgments or any kind of credit card that the buyer needs to qualify for that home. Yep.
That'd have to be asked for pretty early on in the process, wouldn't it?
Yeah. Okay. Now, a wood destroying organism report, so termite inspection is required, especially here in the South. And I think you called me out the last time we did this. You told me that Georgia, no, not in a bad way. You told me that Georgia also was required, and you were correct. Georgia does. So all of these states, and add Georgia, and there's actually a couple more that I saw. You must have a termite inspection on these homes, and that's different from the other types of loans.
That's a good thing, because we are in a wet environment where termites live. So.
Now, back to the fees that are charged by lenders. The lender can only charge 1% of the loan amount. So if you've got a lender and they're charging an origination fee, it must be 1% of that loan amount or less. And a shameless plug, and I think that's the next thing. Yep. We charge no origination fee on VA loans. So that's
nice.
And not just VA loans, but Heroes First. We do loans, for every hero that you probably can imagine. No origination fees.
That's awesome.
Yep. So that it could save the veteran up to $1,500 off of their closing costs. And appraisals is another kind of scary topic that people try to not really bash on the VA, but just try to avoid the VA because of. And I have noticed that the appraisal process has been a lot better.
It actually, I just closed one a few weeks ago, and we had absolutely zero problems with the appraisal. And in fact, I'm sure that it came back above value.
Above value,
because we had discounted the house so much to move it quickly that we knew that it was,
Well, so the appraisal process, to my knowledge, used to be really slow. In order to be a VA appraiser, you had to have been a veteran in order to do it. It's no longer the case. A lot of my VA appraisals are coming back in record times. I'm like, I just
this one came
this.
back in 6 days.
Yeah,
6 days.
I'm seeing less than a week on a lot of them, and I know some of my coworkers up in Jacksonville are always bragging about 3 days, and it's 30,000 above and things like this. But there are ones and twos that will come in. Not that they're not on time, but they will come in under value. And that's where everybody kind of gawks. And I like to call the VA appraisal process super secret squirrel stuff. And it's because when I think of VA appraisers and the process, I think of Navy SEALs.
Right.
And how, they're just super stealthy. They don't let you know they're coming. And next thing you know, they're there and they're gone already. So nobody other than the seller of the home and the seller's agent know that this appraisal is happening because they're trying to keep everybody's fingers out of it.
Yeah, they don't want communication amongst the parties
Exactly.
because to influence an appraisal.
Yeah. So the case number for the appraisal travels with the address and not with the client. And this appraisal has a 6-month life. So
Okay.
after 6 months, it's expired. It's no longer, able to
Right.
be used. And chances
Because
are,
market conditions will
yeah,
change in 6 months.
and chances are, if somebody's buying your house within 6 months, they need to get another appraisal anyway. The
Yeah.
lender's not going to accept the old one.
Right.
Now, we were talking about this a minute ago. Tidewater. That is the word that has been coined for these appraisals that are coming in low. So Tidewater basically is the appraiser did not find this home or this unit up to the sales price, the contract price. And what they'll do is they will contact the lender. They will not tell the lender what it was valued at or any details about it. They will just say, Tidewater has been initiated. You have X amount of days, usually 2 to 3 business days, to have these agents submit comparable listings in the area, and you know how that game goes.
Yep.
And if they don't, then the appraisal that the appraiser did is what you get. If they do, the appraiser will obviously do some homework, and chances are maybe even go out and reevaluate the home and send you a newer appraisal. But when, in my experience, when I've seen Tidewater, then it's obviously been low. It'll come back still a little bit low, but just they'll kind of bridge the gap. So then at that point, the veteran can either say no, because I don't want to pay the difference, or the veteran can pay the difference.
Or the homeowner can reduce the purchase price.
Yes.
Yeah.
Now, that is another cool feature of the VA home loan, that you're allowed to walk away if
Sure.
the terms do not line up with what you're looking for. So Tidewater, it's really not that scary. It's just, I think in the previous market of the last year and a half or so, it was something everybody wanted to avoid because of inflated home prices and things like that. And the appraiser is not going to undervalue these homes unless there are reasons, that
Sure.
they could just be a little bit under
A hole in the
standards.
roof,
Yes.
that's a reason.
Yes. And as long as
Broken
this
AC,
home,
that's a reason.
as long as it's in living standards,
Right.
then chances are it's going to meet and be at value.
Right.
But if there are certain things, like there's a little bit of water damage on your wood trim, or there's a hole where somebody kicked their toe on it and it just broke off, nobody fixed it, that's going to be reflected in the appraisal. Allowable property types, for the most part, we see single family residences, and preferably I encourage it just because there's less headaches to deal with when you're going with a VA home loan. And it can be a 1 to 4 unit. So if somebody wants to buy a duplex or a quadplex, they can.
Live in one
They
and then
live
rent
in
out the
one,
others,
rent out the
pay their
others.
mortgage.
And they can. And in order, if they say they're buying a duplex, live in one side, they can use projected rental income to qualify for the
That's
purchase
awesome.
of that duplex.
Yeah, that's awesome.
So that is a pretty cool thing. We just spoke about that. Townhouses and PUDs are good to go. Condos also, for the most part, are good to go. There is a specific VA website, and I probably should have put the URL here for easy access, but there's a VA website that will tell you, if you type in the county you're in, the state, whatever, which condos are approved and which are not. And it makes it really easy for the buyer,
But not
for the lender.
condo tells.
No condo tells.
Do not get it twisted, folks.
No
Not condo tells.
No. And I know previously, probably at the beginning of the year, I feel like there was about 9 condos that were listed on the approved site for Volusia County.
Mm-hmm.
But recently when I looked, there was about 30 something
Holy
that
cow.
were approved.
Wow.
So I don't know if somebody was doing some research and making
Yeah.
these things go, or what happened. But VA will not do a spot approval on a condo.
Right.
So like a conventional will go out and do a full review kind of thing. They won't do that.
Right.
And then the Volusia County thing. So the condos, the majority of them need to be owner occupied, and that's probably one of the reasons why
Yep.
Volusia County has very few, because they're second homes or investment properties. No commercial property use or limits on them. And same process for conventional is, the condo gets sent questionnaires and all these things to see, what's going on within. And then some financing examples, and I still have been super lazy and did not change the values because I'm just hoping for a better world where
Okay.
where homes are $200,000 again.
Yeah.
But I will tell you that 4.25% on the VA, we're pretty close to that again right now.
Wow.
Yeah, and it's crazy, and I mean
Yeah.
that is obviously with a really squared away
Right.
financial portfolio, but it's nice to see a number 4 again
Yeah.
rather than
Yeah.
5 or 6.
So if you've got that entitlement, this
Yeah.
may be the time.
Yes.
Yeah.
But the biggest difference between this chart between these 3 loan products is going to be your down payment. It's going to be the interest rate because conventional rates are typically higher, and it's going to be that mortgage insurance premium that you're paying each month.
It's good to have that comparison so
Yes.
people can see how that works.
So if you just compare VA to FHA and the mortgage or in the difference of the monthly payment, they're saving $106 a month with the same loan,
product,
same
yeah.
term, same rate,
same house.
and and that's with no down payment on the VA side. So if they put the same amount down, it'd be even more.
Right.
But just to be able to compare them all, and it allows at the end of the day, if they wanted more than 200,000 and they could afford it, they could
Right.
potentially buy $228,000 worth of a home versus an FHA home loan. So that this property tax thing, I'll be quick about it. It's important, especially in the state of Florida, because in Florida we are super veteran friendly. There's what we call 100% service connected rated, permanent and total. So what that means is you have 100% disability, and because you're permanent and total, the VA can never reevaluate you and drop you back down. Now there is a category where you're not P&T, permanent and total, and they can reevaluate you. But for the most part, in Florida, if you have this rating, permanent and total attached to it, you are exempt from your property taxes completely.
And that's super confusing to some buyers
Yes.
who come in after a veteran has been in the home and they see
Zero.
and there's no proration of taxes. And then when their home is reevaluated for tax purposes, they get hit with a
$350
much
a month kind of thing.
larger
Yep.
bill than,
It's funny that you say that because sometimes I'll go in and look at a property tax bill and see that, zero property taxes, no exemptions. Well, this guy's got to be a veteran.
Yeah.
And I kind of can make that assumption, but it is a big deal. Now, for us, I'm pretty sure it's going to be the same across the board for lenders in Florida because this is the state statute
Sure.
for these P&Ts and property taxes. Texas is a little bit different. They allow you to not have to qualify the veteran with the proposed tax payment. But Florida, we haven't quite caught up to that yet. So in order to qualify these permanent and total veterans, we have to count the property taxes against them.
Even if they're not going to pay them.
Yeah, and we're
Okay.
here at Southern Title. I've actually tried to talk to Southern Title about it, and they've given me guidance that as long as we set it up like that they're not paying it, then we're not going to collect for it. But what's keeping us from doing that is underwriting. Underwriting's requiring us to do that. So I did a little homework and pulled this property, this statute from the state of Florida and read it. And the highlighted parts are, the most important to me. And it outlines the fact that if this veteran was 100% permanent and total and was not paying property taxes and passes away, his spouse can carry on that exemption.
Oh, that's nice.
Yeah, so and it's still going to be financed VA, obviously,
Right.
but the spouse can carry that. But once they get away from that home, they probably aren't going
gonna-
to have that.
yeah.
Now they might still, because their spouse did pass away from a permanent or from a service-connected disability rating, because they're still going to have the eligibility in the
Yeah.
future. So that 100% might follow through onto the next property. But for this specific property, they have it for
Right.
the remainder of the time they live there. So that is a pretty big deal.
Yeah.
And as you know, property taxes around here could be 150, could be 350. So
Yeah,
it's a lot of money.
It depends. Well, it completely depends on the structure and
Yep.
the location.
Yep.
Closer to water, more expensive it is.
Yeah. And then another shameless plug here, Heroes First Home Loans. We're exactly what you would imagine we are. We're lenders who put heroes first. So not just military, but we do law enforcement, firefighters, educators, ministry, civil service, and healthcare workers. So
Ministry.
yeah,
That is
ministry.
Wow, that's
Yep.
good to know.
Yep.
Okay.
So anybody who basically serves their country or community, we offer these benefits to. So if you're a USPS postal worker, guess what? You qualify.
Nice.
Yep.
Okay.
And what these benefits we offer you for these heroes are no lender fees. We talked about that, and it's anywhere from $1,200 to $1,500 per loan.
Right.
So that's a lot of money that they don't have to spend at closing, and sometimes that's the make or break between two lenders. And then we give them, it's not offered, it's just automatically wrote up for them, a 3-year, $300,000 accidental death and dismemberment
Nice.
protection plan.
Wow.
So for the first 3 years of having a loan with Heroes First Home Loans, the hero will be protected and their family will be protected up to $300,000
That's awesome.
if something were to happen
I
to
mean,
them.
God forbid. I mean, we don't want
Absolutely.
anything to happen, but
Yeah.
what a relief that would be to
Yes.
someone.
Yeah, I mean, you think
survived.
about a police
Yeah.
officer. They face adversity every day, and
Right.
by the grace of God, something happens that's detrimental to their family, and they lose a limb or something. They get
Right.
this coverage, and
Wow.
they don't have to worry about other bills or being able to pay their mortgage. They can just do as
Right.
they wish with that $300,000.
That's awesome.
Yep. And then here's a picture of outdated Garrett and then some of my information.
Much better hair now.
Yeah, and I think the next picture would have looked better, but I'm still waiting on that picture. But
Okay.
Nothing's changed. I'm still licensed in the same states, so everything's good there. But yep.
So, Garrett, this has been very informative. I mean, I learned things this time that I didn't learn last time, and probably because we're able to sit one-on-one and I can interject.
Yes.
So I want to thank Garrett, not only for coming today, but also for being a strategic partner for Women's Council. And also we're sitting here in this beautiful office of another of our strategic partners at Women's Council, and that's Southern Title. And we're at the Bevel Road location, which we're looking out on this gorgeous lake, retention pond, but you can't see it, so I'm sorry for that. If we could have made the camera angles and the lighting work, we would have shown you. So thanks for being here, Garrett.
Yes.
And if you are someone who is a hero in any capacity, or a service member or retiree, veteran, please call Garrett, call me. We'll put you in touch with each other, and we'll get you to that closing table. We appreciate you being here again at Coastal Conversations with Carla, and please like, share, and subscribe.